So you've probably noticed that property markets in the West are, well, they're cooling down. And because of that, a lot of savvy investors are starting to look east. Today, we're doing a deep dive into Poland's real estate market for 2025. Now, it might look a little complex from the outside, but trust me, for the right investor, it is packed with some incredible opportunities. Let's get into it.
Okay, so take a look at this chart. It really maps out the core appeal of the Polish market. Down at the bottom, you've got the entry price, right? And up the side, the rental yield. Now, look at Warsaw, that big blue bubble over on the right. It's your safe haven, higher price, but a lower yield. But then, glance over to the left, to that green bubble. That's Łódź. You get a much higher yield for a way lower entry price. And that right there, that's the classic risk-reward spectrum we're going to be exploring today.
And we are not talking about small returns here. We're talking about gross rental yields that can top 6%, especially in Poland's secondary cities. I mean, come on, that's a number that is just incredibly hard to find in the big, established Eurozone economies right now. So here's the bottom line. The old days of just wild, explosive growth in Poland, those are pretty much over. What's left is something a lot more interesting. A mature market with these really smart arbitrage opportunities for investors who know exactly where to look. But, and this is a big but, this is not a simple game you can just jump into. It has very specific, and I mean very specific rules, especially for foreigners. It's a bit of a minefield, really, with hidden legal hurdles and financial traps that can completely derail you if you're not prepared. And that's exactly why we're here. Think of this as your essential guide, your playbook for making a smart, strategic, and, most importantly, profitable investment in Poland's property market come 2025. All right, first things first. Before you even start dreaming about rental yields, you've got to be able to get through the front door. So let's break down the very first major hurdle for any foreign investor, the legal rules. Who can actually buy? This is it. This is the fundamental question every single foreign investor has to answer right at the start. And believe me, the answer isn't a simple yes or no. It really, really depends. So this flowchart lays it all out perfectly. If you're a citizen of the EU, the EEA, or Switzerland, you're in the blue lane. You're good to go. Free access, no permit needed. But for pretty much everyone else, you're looking at the orange lane. And here, the rules change based on what you want to buy. A standard residential apartment? Usually fine. But if you want to buy land or a house, well, that's when things get tricky and you're going to need a government permit. And here is a classic critical trap for all you non-EU buyers out there. It's the garage trap. So you're buying an apartment and the parking spot is legally its own separate property with its own land register. Guess what? You need a permit just for that garage space. No joke. This tiny detail can delay a deal for months or even kill it entirely. It's a detail so many people miss. Okay, so you've navigated the legal maze and you're cleared to buy. Great. But now you're up against the next challenge, trying to finance your purchase inside Poland's, well, let's call it a very restrictive banking system. And this brings us right to the money, doesn't it? You might have the legal green light to buy, but getting a mortgage as a foreigner, that is a whole different ballgame compared to how it works in other countries. The entire system, and you really have to get this, is governed by one golden rule. It's called Recommendation S. It's a direct result of the massive Swiss franc mortgage crisis that hurt so many people. So to stop that from ever happening again, the rule is simple. Polish banks can only give you a mortgage in the same currency that you earn your salary in. Period. No exceptions. And this chart shows you exactly what that means in practice. It's pretty stark. If you earn in Polish zloty, congrats, the entire market of Polish banks is open to you. But if you earn in euros or US dollars, you are immediately funneled down this tiny, narrow path to just a handful of specialized lenders, like Alior Bank or Pekao, who are even willing to talk about foreign currency mortgages. And as you'd expect, the terms they offer are much, much tougher. This slide really shows you the price you pay for earning in a foreign currency. A local PLN earner, they might need a 10 or 20% down payment. But if you earn in euros, you should be ready to put down 25 to 40%. On top of that, your loan term is often capped at 20 years, not the 30 or 35 you might be used to. Okay, so you've got the legal right to buy, you've figured out the financing puzzle. Now comes the big one, the most important strategic decision you're going to make to actually maximize your return. What kind of landlord are you going to be? And it really is a tale of two strategies. On one side, you've got your short-term rentals, the whole Airbnb model. It's the high revenue, but also high hassle, high friction approach. And on the other side, you've got long-term rentals. That's the path of stability, predictability, and tax efficiency. So here's the million-dollar question. When you factor in all the costs, all the work, all the risk, which model actually puts more money in your pocket at the end of the day? Which one is truly more profitable for an investor in 2025? Okay, this net ROI waterfall chart, this tells the whole story. It's fascinating. Look at the short-term rental side on the left. You start with this huge green bar of potential rent, way higher than the long-term rental. But then just watch it get eaten away. A massive 25% chunk gets sliced off for the management fee, then utilities, then tax. And by the time you get to the bottom, that net profit bar is remarkably close to the long-term model. So the verdict? It's pretty clear, isn't it? When you factor in all the costs, the risks, the regulations, the long-term rental model just offers a superior risk-adjusted return for most investors. The stability and predictability of LTR, it just wins. And a super crucial part of that stability strategy is using the right legal shield. In Poland, the institutional lease is an investor's absolute best friend. Why? Because it allows for a streamlined eviction process if a tenant defaults, letting you bypass the court system bottlenecks that can plague the standard contracts for months. It's what the pros use. So we have worked our way through the legal maze, we've solved the financing puzzle, and we've nailed down the core rental strategy. So let's pull all of this together into a clear, actionable roadmap for success. Here it is, your 6-step playbook. Step 1, asset selection. You're targeting a 2-room apartment in a business hub like Warsaw's Wola district. Step 2, financing. Be ready with cash or an EOR mortgage and expect to put down 30%. Step 3, value add. Renovate to what we call a corporate-ready standard. That means AC and a dedicated workspace. Step 4, your legal shield. Protect yourself with an institutional lease. No compromises. Step 5, tax optimization. File for the simple 8.5% lump sum regime. And finally, Step 6, the exit. Plan to hold for over 5 years because after that, your capital gains are completely tax-free. But look, this playbook is absolutely built for the Polish market as it stands in 2025. But we all know we're in a constantly changing Europe, with new regulations and big economic shifts always on the horizon. So the ultimate question for any investor, the one you always have to ask yourself, is this: will these rules and this opportunity still be here tomorrow?